morning everyone and welcome to Morning Markets here at True Potential. Now it's encouraging that we're seeing continued rebound in equity markets. Led by the US, we're up over 5% over the last week, and European and Japanese markets are also showing similar strength, which is leading to this positive and encouraging momentum early in the autumn. Now on to economic data, and the data that is dominating the narrative this morning is the latest UK jobs data for the month of August. The unemployment rate is now at the lowest since 1974 at 3.6%. This is a remarkable statistic and shows the strength in the jobs market. We are now at a record number of people in total employment, and we are now well past the level that we were at before the coronavirus pandemic hit in early 2020. Even more encouraging, we're starting to see a record low in those people who've been unemployed for up to 6 months, and those who have been unemployed longer for say over 12 months, that rate is continuing to decline. So as more jobs come onto the market and more people enter the workforce, we're actually seeing a draw from those who've been unemployed. And this shows the continuing tightness in the jobs market. As another reference of that, there are actually 1.25 million jobs available in the UK. And this explains the overall tightness which is feeding into nominal pay awards, which this month came through at 5.5%. This number is even greater for those in the private sector. It's the private sector is leading the way in both the new jobs being created and in nominal pay awards. So this reflects the very broad strength we've got, and it really demonstrates that the strength in the UK is a global phenomenon as well, given the jobs market strength we've seen in Europe and in the US. Now, what does this mean for potential policy decisions which may impact True Potential portfolios? Well, with the energy price cap freeze, which has been proposed by the new government, Liz Truss as PM, we know this will have a material downward impact on inflation. However, this is unlikely to change the policy path of the Bank of England. And that's because the Bank of England were already focused on the jobs market strength before the proposed freeze was put in place. It is because of this jobs market strength, the bank is likely to stick to its path of increasing interest rates, continuing with that next week. Now, the fact that the European Central Bank raised interest rates by 0.75 percentage points last week, and that the US Federal Reserve are likely to do the same next week, very much reflects the strength of jobs markets globally, but also gives the Bank of England some cover to raise interest rates by 0.5 percentage points in all likelihood next week and take the base rate to about 2.25%. And it's because of this continuing strength in the jobs market that the bank are comfortable raising monetary policy levels into what would be called restrictive territory. That is a rate which is expected to have some slowing effect on the economy, say 6, 12 or 18 months down the line when it eventually feeds into new mortgage rates. The Bank of England are no different from the US Federal Reserve and the European Central Bank in that they are trying to bring inflation down to target and doing so in a just way by raising interest rates quickly and hoping to see some weakness in the jobs market, which may then pull nominal pay awards down from around about 5.5% towards 3 to 4%, which is much more in line with the averages we were seeing pre-pandemic. Now, the Bank of England were due to meet this week, but it has been postponed due to the Queen's funeral until the back end of next week. So please do join us tomorrow for further updates on market movements. Take care for now.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.